So this is looking at your income statement to understand what it's saying. Most of us know our income statement or profit and loss. We can kind of read what it says. So I'm not going to go over the basics of that, just a few points. So first, income. As interpreters, since we usually have we send invoices to get paid, and so our payments are usually like 30 or maybe sometimes more longer, 30 days out till we get paid. And because of that, we might earn money in one month but actually get paid in another month. So this income number, it might show you what you earned, but not how much money you've gotten yet. So that's all I want to say about this one. And then the next number I want to look at is your operating income. So this is how much of your income is left after paying for all the expense, like paying for the things that you need to operate your business. So maybe any bank fees, if you have like some subscriptions that you're paying for to run things, insurance, your office supplies, all of that. Like once you like subtract all those from your profit, like what's left is your operating income, and you want this number to be positive because that means your business is paying for operating itself. So that's good. Don't want this to be negative because that means your expenses are either too high for your business or your income's too low or like you're not charging enough to cover your business's expenses. The other number I want to look at is your net income. What do I say now? So this is your profit. Whatever's left over once you've paid for everything during the month, that is your profit. A lot of people look at this number and think, oh, that's a lot. But you can't forget about paying yourself. That amount is not in here unless you're on payroll. But then you would probably be a corporation. As an individual, you cannot put yourself on payroll. You and again, that gets more into the tax side of things. You'd have to talk to your tax person about that. But this profit, you really need to think about this as, do I still have profit left after paying myself? Because you should be paying yourself regularly, even as a self-employed person. You're running a business. If you don't get paid, you can't keep doing this because then you're not able to cover your expenses, and then if you can't cover expenses, like you might not be doing well, and if you're not doing well, you can't keep running your business. So you want to make sure you're paying yourself. And for me personally, when I was interpreting, I would use this statement plus my balance sheet to kind of see how much I've taken out for myself, and then take how much I paid myself, or my profit minus how much I paid myself, to see that I still have profit left. Because then if I still have, because that was like my real profit. Understanding your financial statements. So if you're using bookkeeping software, then you are able to pull your financial statements and see like what they say. So like your profit and loss, of course, you'll want to see that. But there are two other statements that most interpreters usually don't know about and don't check. And even if they know about it, they might not know why they should check them. So first one is the balance sheet. So let me move my screen over, but we're going to review the balance sheet, what it is, and what it means. And so this is an example one. I just created one to share. And so these, let's see, the numbers should math out, but if you notice that kind of seem like, oh, that seems like a weird amount, it's because I created these numbers as an example. But basically the balance sheet shows you the balances of all the accounts in your business. And so that's, of course, bank account balances, credit card balances, but also loan balances. If someone owes you money, like a loan that you're waiting to be paid back, so the balance of that, the balance of how much money you've taken out of your business or put into it, also the balance of profit that you've carried over from year to year. That number is really cool to look at. So I'm going to go over each section. So first, assets. That's what your business owns, what it has. So that's cash, money in the bank, or invoices. So here, let me not get ahead of myself. Okay, so cash equivalents. This template uses the word cash equivalents, which I'm not crazy about. I just like calling these cash or bank actually. Each software kind of uses different terminology, so I'm just going to put bank. That makes more sense to me. Okay, so bank, and then how much money you have in the bank, and then the total for that. For this example, balance sheet is $830.80. Then accounts receivable, so those are invoices that you're waiting to be paid. So you've earned the money, you just haven't been paid it yet. And so that's $2,000. For interpreters, this is a really important amount to keep track of, because if that balance keeps growing, then that means someone hasn't been paying you and they're still not paying you, and they're probably late, and you should definitely check into that. So this amount, really you want to see it like it can get bigger and then go down as you get paid, and get bigger, go down, get big. Like it shouldn't be continuously growing and growing unless you're just, unless when you look into it, it's like they're all current invoices. You're just doing like awesome and have a ton of invoices going out. Then yeah, then that's probably fine. But definitely keep an eye on this number. This Stripe clearing. So let's say like. When I do like my own job, so maybe not through an agency, but directly, and I get paid using Stripe, then it's always a good idea to keep track of that account. How much is in that account? How much has not been deposited to you yet? And so it's good, and that's why it shows up on here. You want to track that also. So there's 100 still in there. I'm waiting to get transferred to my bank account. This next section is what the business owes to other people, and how much you have put in or taken out of the business, or how much has come into the business from profit, or if you had other people invest in your business, but then that's not usually applicable to like the sole proprietor individual interpreter. So looking at, here's a credit card that will show up here, because that's a balance you have to pay, that you owe that balance. And then under equity, owner's equity. So I like to group contributions and draws together. Some softwares kind of make you keep them in one account. I like to see them separately because I like to know how much I put in versus how much I've taken out. You want to take out more than you've put in. Ideally, you wouldn't put any in because the business is running off its own funds. But sometimes, you know, it happens, like you use your personal card to like pay for a plane ticket maybe. So you definitely want to give your business credit for that expense, and that would show up under contribution. Like you contributed that plane ticket to the business, so the value of it is, and let's say in this case 500, so you paid 500, so it's a business expense, and it's like I contributed 500. And so in this case, the owner has taken out $10,000 for the year so far. So what's interesting about this balance sheet is it's cumulative. So up until June 30th, the owner has taken out $10,000, and so you want to reset this balance every year, because you as an individual, we're only tracking it for that year, and then once you file taxes, once the year is over, you're only going to file taxes for that year, and so you will want to reset how much you've taken out or put into zero. Now, if you are a different entity type, you're an S corporation, a C corp, then the accounting rules are a little different for tracking. But if it's just you, one person, sole proprietor, you want to reset this every year, so you have an accurate number of how much you've taken out and put in every year. And how you reset that goes more into the bookkeeping side of things, that I won't explain in this video, because it gets more into like accounting in-depth knowledge, and I don't want to deviate from the point of this. Okay, so also estimated taxes for sole proprietor. That is also an owner's draw. Like the IRS views that as like that's you personally paying your taxes, but I want the business to pay for it, and so I have it show up on my balance sheet under draws. Like when I was interpreting, it shows up under draws as like a subcategory. but it's still there separately because it's really easy at the end of the year to tell my tax person I paid this much for estimated taxes. So really easy to track it there. Net income, that is profit, how much profit your business has made for the year so far. So it's nice to see that number there. Retained earnings is profit from previous years, so not the current year, but the years, so profit rolled over. And so retained earnings is profit minus whatever you've taken out of the business. And then the total equity is just total how much is in the business, either from profit or from you. And then total liabilities and equity, that number must match total assets, which is why when I checked that after I created this example balance sheet, because I want to make sure they match, because if yours don't match, that means something is wrong, or at least you need to check on why. Okay. Looking at the cash flow statement. So this one, usually most people don't know about, but it's really cool. I like it because it tells you where all your cash went. So it's kind of like your profit and loss part 2. And so it starts with your net income, your profit, so how much profit you had left over after expenses. And then because not all of that money actually goes into your bank account, it tells you what happened to that profit. So you'll notice this line says adjustments to reconcile the profit to actual cash, basically. So this is like the adjustments that are being made on paper, because your P&L is not always what actually happened to your cash. P&L is just list of expenses in this time period, and income you said you earned in this time period. So as interpreters, we get paid with invoices. So maybe I earned $2,000 in a month, but it doesn't mean I got paid $2,000 that month. So you'll notice this next line, accounts receivable, says a negative $2,000, because yeah, I earned it, but I didn't get paid it yet. So we're actually going to take that out of my profit, because that actually didn't show up in cash to my bank account. Jay's credit card, $100. So it was $100 that was spent during this period, but I didn't pay for it yet. So it's almost like that $100 is still sitting in my bank account. So it showed up as an expense on my profit and loss, but it's not, the cash has not actually gone out yet. So we need to adjust that profit left over amount. And so how much cash we actually got in this month was $1,803.83. Investing activities, this is usually zero. This is like if you bought machinery or an asset for the business, or you sold one, or like you know, some investments into it. So we usually don't have those because we're not buying assets or large equipment. But financing activities, so this is if you like got a loan or paid off a loan, someone invested in your business or you invested, and or when you take money out, that will show up here. And so the owner took out $2,000 for the month, and so that's showing up as negative $2,000. So remember that $1,800 in cash right here. Sorry, I know this is a lot of numbers, but this $1,800 minus this $2,000 that was taken out. That means we actually took out more money than came into the business cash-wise. So even though we may have profit of $3,700 something, cash actually went down. And this is where when people get confused, because they're like, I made money, but like, where is it? Like my bank account is getting lower. This is what happens. It's the cash. Like what happened with your cash? Like the actual money. So you can see that we started with $1,000 in the bank, and then since we actually decreased that $196, then we actually only have $830 in the bank. And so that's the explanation for I made money, but my bank is getting lower. That's why I say, like, I like the statement. It's really cool. Good to check in on at least quarterly or at least annually, just to see, like, is your money doing what you think it's doing? Like, you made money, but do you actually have money? Because without cash, your business will die.